Hi guys, Piotr here, welcome back to my channel. Today it's time for dollar outlook. We are talking about the Q3. We've seen the FOMC minutes as a bullish case for dollar waiting for non-farm payrolls. So where from here for euro dollar, dollar yen and the cable? Without the further ado, let's jump straight into the charts. Let's go briefly through the FOMC minutes. Fed sees more rate hikes ahead, but a slower pace. Well, the Fed officials at their June meeting decided to hold off on rising interest rates, opting for a pause to assess the impact of the 10 previous hikes. Minutes released Wednesday indicated disagreement among the members, with some saying that rates should go higher as inflation remains elevated. Well, we know that one of the reasons of the higher inflation is a quite healthy job market, so the upcoming NFP is going to be very, very important. Okay, let's start with euro dollar. So this is the euro dollar monthly chart, and well, we are right now bouncing around the mid of the very old consolidation established between the 2014-2016, as you can see over here. And why it's so important? Because we've seen the attempt to upside break, then retest half of that mid-range, lower high and strong sell-off. So as of now, I cannot say more than the retest of that mid-range, and from here we might see lower levels. But trying to take into the consideration the bigger picture and the latest price action over here, what is important? Well, the red dotted line is a yearly open. That's very important. It's around 107, and the red horizontal line over here is a Q3 open. All right, so that's also very, very interesting. And if we are going to watch for the full price action, it's nothing else than the stop count here and there to the upside and to the downside. So what I do expect during the summer lullaby, as we have this nice beautiful tweezer top around or between 110, 111, that could be the top for now. And as long as we are above the yearly open, that might suggest that the range in between 107 and let's say the top 111, 400 pips could be in place. So in that case, if we are going to see the monthly close above 111, then 115 could be the next name of the game. And if we are going to close below the yearly open around 107, then 103 is what we might see towards the end of the Q3. So as of now, I would try to sell the rallies towards 110, 111 from the medium and higher time frame perspective, and I would try to buy around the yearly open around 107. Let's move to dollar yen. 170 on the way. That's how the dollar yen monthly chart looks like, taking into the consideration possible price action. Of course, we have to remember that the Bank of Japan here will try to defend 150. So it's going to be very, very interesting situation. As of now, we were trying to consolidate at the very beginning of the year, and then last 2 months we've seen the strong appetite for the higher levels. So as of now, from the higher time frame perspective, looks like 148 and 150, that's the upside target, And as of now, as long as we are above the June low, and we are talking about the levels, psychological level around 140, that could be the name of the game. Of course, we are around 145, which means that we are trading the no man's land. In that particular case, let's switch lower and let's have a look what we have on the weekly chart to get a little bit bigger picture. And from that perspective, I would say that the very important is the broken swing high or two swing highs. In that case, we are talking about some kind of the levels close to 140 again. So looks like monthly and weekly are trying to agree on the 140 as a psychological level, but from the dynamic perspective, the rising trend line, and as of now, levels close to 142.50, that's the near-term support, and any kind of the pullback towards this level might be treated as a good buying opportunity with 148, 150 as a target. Break down through 142.50 may reopen 140, and we might see bigger consolidation in between 140, 145. So it's time for the last one, and the cable. And the cable monthly chart is where I see the biggest problem for dollar. If we are going to take into the consideration where we are right here, right now, around the levels close to 127, and if we are going to see the previous quarterly open, all right, around 123, and the yearly open around 120, that is showing that we might see higher levels. Why I think this? Because, well, we were able to get back above 120, that very significant development, and the market is not looking back, market is going higher. Of course, there is a little bit of the hesitation taking into the consideration the previous month and where the market closed. So medium term Q3, we might see some kind of the bouncing in between 125 down to 123 and up towards 127, 130, but looks like 135 could be the name of the game. And why 135? It's because what we've seen in the past, that's the thing number one, plenty of price action around this level, but also that's the latest big rally before we've seen huge crash. And the 135 is around 50% of that rally. So as of now, from the medium and long-term perspective, the bigger pullbacks down towards 125, 123, or maybe even 120 to retest this yearly open again could be the buying opportunity when it comes to the cable. Of course, the longer we are staying below 130, it could be some consolidation game, and well, at some point the bulls might be disappointed and they might try to give up, and only from the long-term perspective, the weekly monthly close below 120 will suggest that retest of the lower levels could be in play. With that being said, guys, strongly encourage you, do your own homework, do your own research before risking real money. Wish you great next trading session. See you around, take care, and goodbye.